people, it's me Kumanawa, your money manager. In today's video, I want to take you through a comparison of a standard one room versus a studio apartment. This video is really meant to help somebody out there. Maybe you want to get into rental investments and you want to do low cost housing, and you're still debating between the structures, the kind of structures that you can do, and you don't know how to decide, you don't know what factors to look at for you to arrive at a decision. So this video is meant to help you with that. Like I've said, we are going to look at a comparison between studio, pad, and a standard one room. And the only best way really to see which one is a good investment for you is to look at the numbers, because numbers don't lie. Numbers do tell you a story. So you need to be able to know how to sit down, calculate your numbers, work out the numbers, but most importantly, you need to know the ratios that you have to use to decide or to measure whether it's a good investment or not. And that ratio is your return on investment and the cash on cash return, the cash back, the cash payback period, or what we call the cash payback period. So this is what we are going to look at today. Before we look at the figures, maybe let's look at the dimensions of the blocks that we are going to be talking about here. We are looking at standard one rooms made up of a block. We're looking at standard one rooms, a block made up of 3 units, with each unit measuring 3.5 meters by 3.5 meters. So the total length for the block is 10.5 meters, obviously with a few meters provision for the division. So it's 10.5 by 3.5. That's the standard one rooms block. And then on the other side, the studio pads is also a block of 3 units, with each unit measuring 5 meters by 4 meters. So our width here, total for the block, our width here is 5 meters by 12 meters length, obviously also with a few provisions for the divisions. So those are the dimensions for the blocks that we will be comparing today. So now let's get on to the numbers. The first number you should have is your capital employed. Capital employed, we are looking at the amount of money that you invested in the project, or you are more likely to invest. So if you are out there doing a property investment project, you need to make sure that you are tracking all your expenses, because without this number, it's going to be impossible for you to do the calculations and to even measure if you have made a good investment or not. So please make sure that you open a spreadsheet where you are going to track your project costs. So let's look at the capital employed for a block of 3 standard one rooms and a block of 3 studio pads. I don't have anything else to use but to use what I have done myself personally. So let's look at the capital employed. Like I've said, for the block of standard 3 one rooms, we have used a total capital of 85,500. So this 85,500 is made up of 2 things. It's made up of the total cost for the construction of the entire block, and because it's the standard one room, and maybe let me just explain what a standard one room is. A standard one room is just the room. There are no fittings, there are no bathrooms. It's just an empty space where somebody's going to come in there and occupy it. And because it's like that, there is a need to build something outside. So we have a block of water system toilets outside, and the way we've done it is that a block of 3 people, they share 1 toilet, so it's a ratio of 3 to 1. So I had to apportion the amount that we spent on the toilets to each block, and when I did that, the figure came to 10,500. So 75,000 being the total building cost, plus the 10,500 being the apportionment of construction cost for the water system toilets, for the block of toilets. That's what we are getting, 85,500. And then we look at the studio pad. A studio pad, you don't have to worry about building toilets separately because the toilets are enclosed in the unit. So the total cost for this one as we're looking at 231,000. This is the total cost for the latest block that we built. So you can see that will be our capital employed for each block. So just by looking at this, you are going to see that obviously because of the variations in the types of units, the capital employed is going to also differ. More capital for a block of studio pairs, understandably so, because you are looking at plumbing, you are also looking at separation of electricity meters, so that is going to be more capital employed than just a standard one room. Because even for the standard one room, when it comes to electricity, it's almost impossible, or it doesn't make any business sense for you to separate electricity per unit, until maybe when we got into a point where there's too much capital and we can start making those improvements. But at the moment, they are just sharing an electricity meter, and the rental that we collect from them, part of the money goes towards buying electricity. So that's it on the capital employed. The next figure that we are going to look at is the gross rental income. Gross rental income, we are looking at the total rental that you are collecting, and it doesn't only look at the total rental that you are collecting. Sometimes it will look at maybe if you have additional income that you are collecting, maybe you have other ways of making money that will also form part of your gross rental income. So for the block of standard one rooms, this will be this is 700 per unit times 3, because the block is made of 3 units. So for the studio pairs, each unit is 1,500. So 1,500, we multiply that by 3, we are getting 4,500. That is the total. So now that you have the income, this is the income that you are getting. It doesn't mean that all of this income is coming to you. Obviously, because this is a business, and I encourage you to consider it and to regard it as a business, there is going to be some operating expenses that you will have to take care of. And now we're going to look at the operating expenses. Let's look at the standard one rooms, the block of standard one rooms. What are our operating expenses there? We are looking at a total of 544 pula, 74 thebe. This is what we have to pay for. And somebody might be asking, what is this made up of? Let me give you that breakdown. It's made up of 300 pula for electricity, so 100 pula from each unit goes towards electricity, and then it's made up of an apportionment for water, so 150 for water, that will be 50 pula per unit. And there is also 94 pula, 74 thebe, which is made up of cleaning and garbage collection, which is sort of like 31 pula, somewhere there, 31 pula and a few thebes per unit. That will give us a total of 544 pula, 74 thebe. That's our operating expenses. We look at the studio pairs. What is our operating expenses there? As a total of 619 pula, 74 thebe. What is this 619 pula made up of? It's made up of water, 150, which is 50 pula per unit, and is made up of the 94 pula, 74 thebe that goes towards cleaning and garbage collection. And also there we've made a provision for sewage collection. That is 375 for sewage collection, a total for the block. So that will give us the 619 pula, 74 thebe. That is our operating expenses. What do we then do with this operating expenses? We are going to less them from our gross rental. So when we less them from our gross rental, for the standard one rooms, what we are getting is a total net operating income of 1,555 pula 26. This is our net operating income. This is for the standard one rooms. And for the studio pairs, our net operating income, which is made up of the gross income minus the operating expenses, is 3,880 pula 26 thebe. That's our net operating income. What's next after the net operating income? You are going to look at debt service. Obviously, in our case, we don't have any debt that we are servicing. So if you're somebody who's going to take up debt to build, so that figure, the monthly installment is going to come here, but we don't have that monthly installment. So our debt service is 0 per block. And then from there, we are going to say the net operating income minus the debt service. But like I've said, the debt service is 0. So we are still going to get the same figure. our cash flow. This is now our cash flow, money that's coming to us after deducting all expenses, including the debt service if it's there. That cash flow is for the standard one rooms is 1,555.26 tebe, and that cash flow for the studio pairs is 3,880.26. Where what else after doing all this? I know the cash flow, which is very good, because cash flow, like I've said, is the money that's coming to you after deducting all expenses. And as a rule of thumb, when you are going to go out there, either you are going to finance your property, you need to make sure that you do a little bit of calculating to ensure that whatever property you are going to acquire, more especially if it's for rental income generation, the cash flow should be positive. If the cash flow is negative, then it means that every month you are bleeding. You're taking money out of your pocket to service this property, but it should be the other way around if you are investing for cash flow. Okay, now that we've gotten our cash flow, how do we then get to our return on investment? That is a very important figure that we have to know, or ratio that we use to measure whether our investment is good or not. How do we get to the return on investment? We go to the net operating income. We divide that by the capital employed. And that net operating income, we don't use the monthly one. We use the annual net operating income. Let's look at our numbers. For the standard one rooms, what is our return on investment? Our return on investment is 22%. 22%. You can end it there and ask yourself, is 22% a good return? And what makes you say it's a good return? Because this information is very subjective. For you to say whether it's a good return or not, you have to compare it to other investment assets that are out there. Okay, where else can you get a rate of return of 22%? You need to ask yourself that. If I put my money in stocks, will I get 22%? If I put my money in unit trust, if I put my money in alternative investments, any other investment, will I get the 22%? That's how you use this important figure, important ratio, the return on investment. You compare it to other investment. You don't look at it in isolation. So now let's look at the return on investment for the studio pairs. Our return on investments for the studio pairs is 23%. There you have it. 23% is percent higher than the standard one room. So just looking at these numbers, you are going to make a conclusion that a studio pad is a better investment compared to standard one rooms. But like I've said, this information is very subjective. There are so many ways of improving these numbers. Also, it will depend on location, because for standard one rooms the rental is 700. If you move to another location like maybe Gaborone, where you can command 900 pula per unit, you are going to realize that your ratio is actually going to be better. So it's always important for you to do this kind of calculating before you can arrive at an investment decision. You can see what my figures are looking like, but it doesn't mean that the figures in another location are going to look exactly like mine, because there are a lot of factors here. The cost of construction, is it cheaper in your area to build, or is it expensive in your area to build? For me, Mau is quite expensive to build. Is the rental better? Are rental rates better in the area where you are, or rental rates are not better? So those are the things that are going to affect your return on investment. So make sure that you do your calculating, and also you couple that with your research so that you can arrive at an informed financial decision. I'm indifferent between the two, because 1%, I know I can improve for the standard one rooms. If I can just maybe invest money on the separation of meters, then that 300 that I'm paying every month, I'll take it away, and I'll be able to recover that investment outlay over time. That's another way of improving the return. And one thing, I was just playing around with the numbers. If I just increase the rental to 800, the return on investment is going to shoot to 26%, which will now be higher than the studio pad. This is why I was saying that the information is very subjective. It depends on what you do. on what you do, the improvements that you want to do, and the location. But in a nutshell, this is how you get to the numbers, and this is what you look at. And also, it's important for you to assess, to see if these returns that you are getting, do they align with your investment criteria? Do you even have an investment criteria? For me, they do align with my investment criteria because I do have factors that I look at to consider whether the investment is good or not. So my numbers, they should tick for these two things. The first one is return on investment. I'm looking at double digit. I'm looking at 15% bare minimum. So when I do the calculating and it doesn't meet the 15% as a cross, it's an X for me, I don't proceed with it. And then I also look at the cash on cash return, which is your cash payback period. The thing is, as an investor, when you put money into an investment, you want to be able to recover your money as quickly as possible so that you can take it and employ it in another investment. So if it's going to take you a lot of time to recover your money, it doesn't make for a good investment. So my cash on cash return, I'm looking at 5 years. So these two, they are all meeting my investment criteria, so they are a tick for me. So I challenge you to go and set your own investment criteria as well. This is all that I wanted to share with you today. Thank you so much for your time. I will see you in another video. Bye.